Can I start with your views on whether it is too early to start to assess whether or not the latest virus outbreak here in the capital is going to have any material impact on the economy?
Okay, thank you, Tom, and good morning, David. I think the new outbreak of the COVID-19 virus in Xinfadi, a wholesale market in Beijing, actually has just reminded us that the virus has not gone away yet. It's a long battle, but it doesn't mean a second wave of national panic, because I think this time Beijing has been responded quite quickly, and we are able to detect new confirmed cases in a timely manner. So this will help quickly lock and cut off the chain of infection. So basically, we believe that Beijing should be able to control this new wave of new outbreak of the virus, and we still keep our estimation of this year's China GDP growth rate maybe around 3%, so not get even worse because of this new Xinfadi issue.
Yeah, that's an above consensus call on economic growth here in China. How much of that is down to the policy response? The support for SMEs has been crucial. It's been a priority, of course, for the government. Have they got the tools needed to ensure that liquidity is getting to small and medium-sized enterprises, the private sector? Is that actually happening? Are we seeing a material impact?
I believe in the past years, the PBOC and the other departments regarding this, they have been given some traditional monetary policy and fiscal policy to help stimulate the real economy. This year, we still have these traditional measures, say triple R cut, LPR reform. These a variety of measures are introduced to rescue the enterprises. But this year, we also give some new, bailout type of financial support policies. This year, we allow the banks to extend the time limit for repayment and principal, the repayment of principal and interest. So these really help the SMEs to go through this difficult time. So these are the new measures. We call it quite unique bailout type of financial support measures.
Yeah, you describe it as a bailout, which is interesting. Will local governments need a bailout, I guess, is a question, because revenues are falling, spending is rising. There's a significant gap between the two. What needs to be done to address that, do you think?
That difficulty is also a very real issue we are facing recently. This year, the central government will try to raise their leverage ratio. So they have increased the central deficit ratio to above 3.6%, as well as issuing a new kind of special treasury bond. The special treasury bond is issued by the central government, while the money collected will be used to transfer to the local government to help saving local government. So this is also quite unique this year. I am quite confident with the counter-cyclical policies, because they are like a package of policies as a whole. They are giving to the market quite quickly and effectively.
Yang Fan, this is David. I think before we get to financial opening, I just one last question on the debt story. I think it's interesting that Tom brought it up. You know, a few years ago, LGFVs, a lot of people were talking about the risks packaged within those, the debt sitting on local governments. Now what we're seeing are these special purpose bonds, also from local governments as well. I'm wondering, do you see those two types of debt as the same? And do you think China recognizes local government bonds as government debt themselves?
I think the debt issued by the local government and the local government special platform, these are quite different, because one is using the shadow banking system, one is using the fiscal system itself. So this year we are moving back to the fiscal system. The majority of the bond will be issued by the local government themselves. That is why the central government increased the quota for the local government special bond. So that bond will be used to infrastructure investment as well as some other like healthcare and also education system supporting projects. So we are not moving back to a shadow banking system. And that is also thanks to the progress we had in the past years, the deleveraging policy. So we have been trying to lower the systematic financial risks from the local government side. So this year we will use more bonds, we will use more transparency, we will use more higher effectiveness to help the insurance of the local government special bond, but not using the shadow banking system.
Fair enough. At least we see what that debt is like, and at least we're bringing it back on the books. Markets and asset prices in China are still largely driven by policy changes. You can take your pick, economic, social, industrial. What do you think will be the biggest policy shift in China over the next 5 years?
I believe there will be reform because China is moving to a new round of reform stage. And in this new phase of the reform stage, there will be capital market reform, there will be SOE reform, as well as land reform, financial system reforms. And in this reform, I think the capital market reform is definitely playing a pivotal role in the economy. So we are building up a more standardized, more transparent, and open capital market. And also, if we see the Hainan free trade port policy, which is released by the government already, we believe that the free trade port construction is accelerating. By giving more policies to Hainan, we will try to. It's like a pilot zone. So it's the steps to do more liberalized of the trade and investment, and more financial and tax reform to improve the local government competitiveness, and also the free trade port may use their own legislative power to set up more policies for themselves. So basically, in the next 5 years, I believe reform and open up will make China quite different from the past.